Now we are going to see next about advances. Now, why I am saying that advances is a very important part is that we are doing a balance sheet audit. In a balance sheet audit, it will be done yearly, and in that you have to keep the most important things in focus. You will get only 3 to 4 days time for completing the entire audit. The banks will not give much time like 10 days or 15 days. They will give only 3 to 4 days time. You have to complete the audit within that period. First, you have to make a priority list. First thing what you have to check, second thing what you have to check, that priority list should be there. Only then you can complete the work efficiently and within the time limit. So for balance sheet audit, what you have to first verify is advances. You have to verify it in detail. It is very important part, and if you do not verify this, there is no use of doing the balance sheet audit. This is the very critical part, and you have to verify this fully. To how much extent you can do, you have to focus on this part on the first as the first priority. In tax audit, we will check like TDS is properly paid, whether the TDS returns are properly filed or not. That and all we will check. But in balance sheet audit of bank, we have to shift the focus first to advances. This is the important topic in bank audit. Here one more thing is, this is a very detailed guidance note relating to advances itself. There are 120 pages of content. I cannot cover everything in this video, but I will cover important aspects of advances. I will be covering very important things which you should mandatorily check. So I will be giving the important things, and the guidance note you can download it from ICAI's website. First thing is, there are two types of advances: fund based and non-fund based credit facilities. Fund based means there will be actual outflow of cash. You have to actually hand over the cash to the borrower. But for non-fund based credit facilities, like it is like you are giving a guarantee. Only if the borrower does not pay, you will be required to pay. Generally, you will not be required to pay. Only when the default of borrower, there will be a liability on you. The next thing is audit approach. What you have to see in the audit approach: outstanding amount you have to verify, amount due to bank, and loan document you have to see, whether any unrecorded advances there, that you have to verify, whether provision are made actually as per RBI norms and generally accepted accounting policies, that and all you should check. And there are two types of advance: large advance and small advance. For large advance, what is the threshold limit is that 10% of total advances or 10 crore, whichever is less. You have to first find this limit. After finding this limit, any advance above the threshold limit, it will be called as a large advance. Then up to that threshold limit, it will be small advances. While examining advances, all the large advances you should make examination, and other small advances you can verify on a sample basis. And in that sample basis also, you have to ensure that SMA 1 and 2, stressed account, special mention account, are included. That also you should verify. And then in the sample you are taking for small advances, what and all should be there: advances sanctioned during the year, and adversely committed advances. Previously some audit might have happened, concurrent audit, internal audit, or RBI inspection. In that there will be adverse comment about certain advances. That also you should include in the sample. And then sanctioned and closed within a short span. If the loan is opened on 1st March and it is closed within 15th March, it is closed in a very short span of time. This is a very important area, and there might be frauds happening in this area. So you have to include that also in your sample. Next thing you have to check is stressed accounts, amounts overdue for more than 60 days. That is SMA 1 you have to check. For SMA 1, it should be more than 61 to 90 days, it should be overdue. Only then it will be called as SMA 1. So that SMA 1 you have to check, and that SMA 1 you have to take the list as on 15th March. As on this date, what are all the SMA account in SMA 1, that you have to take, and in that you have to check whether any SMA is made into regular account by unusual transaction. For this much days no credit, no amount utilized, like that it is there, but suddenly some amount is credited and it is stopped from becoming a NPA. If that is happening, you have to check into that. Any unusual transaction is happening for regularizing the account and stopping it from not becoming NPA. And then next thing is unsecured exposure. We saw that what is an unsecured loan? There will be no security for the loan, like a clean advance. For unsecured loan above 1 crore, it is a very important focus area. In that it will be very impactful for the branch if that loan becomes default. So in that you have to check that financial and non-financial factor you have to check, and you have to make provision if it is required. For classifying it as NPA, you have to see the financial and non-financial factor, and if there are serious problems with that, you have to make it as a NPA. If there is a problem, you can turn it as a loss asset and make 100% provision for that. And then the next thing is quick mortality cases. If an account becomes a NPA within 12 months of sanctioning, for example, if 1st April 2021 you are sanctioning the loan, on within 31st March 22 the account is becoming as an NPA. Within 1 year itself the account becomes an NPA. Then you have to see that whether any problem is there. It is called as a quick mortality case. You have to avoid that such accounts, and you have to find out the reason why it became NPA, whether the credit assessment it is wrong, or the borrower has some serious problem, or the bank manager gave the loan without assessing the borrower properly. That and all you should check. And then list of accounts upgraded during the year. You have seeing the credit facility of the borrower and you are giving additional loan to him. And then accounts rated adversely, that also you should see. Obtain the list of accounts identifying early warning signal. In the bank itself, internal control or internal management, they will itself identify some accounts which are stressed accounts as per their bank policy. That they will identify, that list will be there. That also you should look into those accounts. And then the auditor should also verify whether loans are provided only after proper KYC compliance, and then the loans sanctioned are as per the loan policy. While sanctioning the loan, they should follow the loan policy of the bank. Whether they are following that or not, that you should check. And the necessary document, whether they are properly executed or not. And then custody and storage of documents, and the loan documents are properly stored safely. That and all you should check. And then if the securities are in nature of shares, then the lien should be marked in the name of the bank, and effective control should be retained. If the share is pledged, then you have to make a marking on the share document that this share is pledged with the bank. The bank has the first right towards that share. Whenever this share is sold, up till the loan is loan is running, you have to first pay the amount to the bank. Only then you can make the proceeds payment to other persons. That is marking of lien. That whether it is done properly, that you have to check. And then stamp duty properly paid, that you should check. And then if the goods in possession of the bank, sometimes stock you are keeping it with the bank as pledge, the stock is in the custody of the bank, and then you are getting the loan. In that you have to verify the content of the package, whether the original stock is in the package or some other product is in the package, that you have to check. And then drawing power register. Whenever the drawing power is updated, or what is the existing drawing power for the loan accounts, that and all will be in the drawing power registered. That also you should check. It should be updated every month. Whether it is updated or not, that you should check. And then valuation of primary and collateral security. What is the value of the security, that they will determine by using an independent valuer. Whether that is properly done or not, valuation is done, how it is valued, what is the bank policy for valuation, that and all you should check. And then policy related to review of CIBIL. If the loan interest, sometimes the loan interest rate depends upon the credit score of the borrower. If the CIBIL score of the borrower is very high, he is a very credited borrower, then you can issue interest rate at low for the borrowers. You can issue loans at low interest rate for them. If the CIBIL score is very bad, then you can make loans at a very high interest rate for those borrowers. That also you should check, whether the CIBIL score review is properly done or not. And all accounts in which the sanction limit or drawing power are irregular, that also you should check, whether there is any irregular amount outstanding in relation to the sanction limit or the drawing power. And then calculation of drawing power in respect of stocks hypothecated. You have bought cash credit by hypothecating the stock. In that, how they will calculate the drawing power? There is certain calculation. That is the point here. In that, they will not include the unpaid stock. For example, if you have stock related to 1 lakh rupees in your godown, you are giving this to stock statement to the bank and asking loan for 1 lakh. In this 1 lakh, there are certain stocks which is unpaid. Unpaid means you have got the stocks on credit. You have not repaid the amount. Such a stock is called as an unpaid stock. That stock they will not consider in the asset category. For example, if the unpaid stock is 25,000 rupees, they will consider the value of stock only to be 75,000 rupees. They will not take full 1 lakh rupee as the stock value. creditor will be outstanding against such stock. You have to repay this 25,000. Only then the stock will be owned by you. Till that it is the stock of the creditor. You cannot own that stock. So that will not be taken as the stocks category for giving the loan. And then this is the drawing power computation formula. First thing is you have to take the stocks, and then the debtors, the amount due to the borrower. The borrower is running a business. Some customers have got goods on credit from the borrower. They have to repay to him. That is a asset. It is called as debtors. That also they will include. And then creditors, any creditor for the borrower, that will be reduced from the amount. So this will be the total eligible current assets, and that they will reduce the margin. Some 10% or 15% will be reduced for the purpose of providing for diminution in the value of the asset. By doing this, they will calculate the drawing power. In the debtors, they will take only eligible debtors as per the bank policy. And then stock, they will avoid the unpaid stock. What is unpaid stock? The stock for which the amount is not paid by the borrower. The next thing is, you have to take the realistic value of the hypothecated stocks. You should not take any imaginary value. It should commensurate with the actual amount which is in the stock. And then the auditor should ensure that fields which system copies from last year are same, and should take extra care in relation to date of NPA. When the advance is becoming NPA, when it is becoming doubtful, that date and all you should see carefully. Whether it is properly calculated or not, that you should see. And then examination of loan documents. For example, if the borrower is a company, you should get the necessary documents like memorandum of association, articles of association, certificate of incorporation, that and all you should get. But in case of partnership firm, you need to get the registration certificate for the firm. There will be different documents. That and all, whether it is properly received or not, that you should check. And then in many banks nowadays, loans are processed at central offices. The loan, whether it should give or not, that is not in the hand of the manager of the branch. It is decided centrally at loan processing offices. So in such cases, the loan document will not be available physically in the branch. So in that cases, what the auditor should do is that it should request the branch management for files. What are all the files you are required? I should obtain a list and should give that list to the branch management and ask these documents. The branch management will obtain those documents from the head office and provide it to you. The next thing is review of operation of the account. You are getting the loan and you are utilizing the loan. Whether the loan is utilized properly, that you should check. The loan is bought but no utilization is done, that is an irregular operation. And more amount is withdrawn, more than the drawing power or sanction limit, that is also irregular. That you should see. And window dressing is happening or not, that also you should see. If the amount is not repaid for 90 days, it will become a NPA. So up till 89 days they are waiting, and on the 90th day a huge amount of credit is happening on the account and all the loans are cleared. In such cases you should see what is happening. Suddenly on the 90th day, how they are getting all the money and repaying. For the 90 days they are not paying, no credit in the account. But suddenly on the 90th day, for stopping the account from becoming NPA, huge amount of credit are done. Whether any fraud is done, genuinely the borrower is paying that amount, that and all you should verify. This is called as window dressing. For showing the financial position of the branch as proper, they will try to stop the account from becoming NPA. For stopping that, they will make some unusual transaction and transfer amounts from some other account to this loan account for stopping this from becoming NPA. This and all the branch officials may do or may not do. That you have to check. And then credit is whether it is healthy for the volume of business and turnover. For example, if the borrower is saying that I am doing a very big business, I will have an annual turnover of 10 crore. The projected turnover for the next year is 15 crore. Now I am asking for loan of 5 crores. Like that he is asking and getting the loan. Now you have to see the bank account, whether the transactions are as per that turnover. If there is a 10 crore turnover, at least 7 crore or 8 crore should be as per bank. Bank account should reflect that amount of turnover. There should be credit and debit corresponding to that amount of turnover. But there is no activity in the account, but the borrower is getting 5 crore or 10 crore loan, then it is a problem part. There you should verify the borrower genuineness. Then if the credit limit is more than 10 lakh, for example, if a borrower gets a 11 lakh loan, Now annually what the bank should do is that it should get the auditor's report and audited financial statement for such borrower. Every year it should collect and keep it in their loan document. They should use it to recompute the drawing power or sanction limit, and they should keep and verify the documents that is required to be collected by the bank. The next thing is, and when the interest is charged, you have to verify it on a sample basis, whether correct rate of interest is charged, whether the benchmark linked rate. For example, there will be LIBOR rate, London Interbank Exchange rate, like that there will be some rate which will be changed frequently, like because of market movement or some other thing, the rate will be changed. In some loan cases, it will be that the rate of interest will be charged as per the existing LIBOR rate, like that they will keep. Now if the LIBOR rate changes, the rate of interest on the loan should also change. Whether that is properly happening or not, that you should see. This is called as benchmark linked rate. LIBOR is a benchmark and you are linking the rate of interest of the loan with the benchmark rate. In that, IRAC norms properly followed or not, that and all you should see. And then if the advances are guaranteed by Export Credit Guarantee Corporation, like that there are certain corporation. For exporters, the Export Credit Guarantee Corporation will make guarantee for the payment of exporter. In that cases, the bank can give advances based on the guarantee of the corporation. So, if the borrower does not pay, the Credit Guarantee Corporation will pay the amount to the bank. Here, if the borrower does not pay, what the bank should do is that it should lodge a claim with the Export Credit Guarantee Corporation, like that you have given a guarantee for this borrower, he has not paid, now we are demanding the amount from you, like that they will send the letter and claim the amount. If the claims are declined, then you should not consider the such advances as recoverable. For example, one borrower has got a loan of 1 lakh rupees from the bank, saying that the loan is guaranteed by ECGC. He has provided all the necessary documents. Now if he defaults on this loan, you are going to ECGC for demanding the repayment, and the ECGC is saying that we have not guaranteed for this borrower, this claim we are denying, like that they are saying. Now for that loan account, what the bank should do is that it should not consider as recoverable. It should not keep it as a standard asset. It should keep it under the loss asset or doubtful asset as per the bank policy. It should not be as a recoverable asset. That is the main point. And then the next important point is how the advances will be classified as secured, unsecured, doubtful, that and all, how it will be classified. For example, if there is an advance amount of rupees 11,000, the bank has given loan to a borrower 11,000 rupees. In that there is a primary security for the loan. The value of primary security is 7,000 rupees. This much portion, 7,000, will be deemed as secured. In the balance sheet, this much amount will come as secured amount. And then value of collateral security is 2,000 rupees. Collateral security, it is therefore 2,000 rupees. It will also come under secured. And then there is value of bank or government guarantee, rupees 1,000. This 1,000 will not come as secured. As we already saw, there will be a separate portion in the balance sheet for advances which are covered by bank or government. In that place, the 1,000 rupees advance will come. Remaining 1,000 will be shown as unsecured advance. And then one more important point is the bank should classify it as NPA or not. It should be based on the overall limit utilized versus total incoming limit sanctioned. This case is a case of you are granting, for example, 1 lakh rupees drawing power for a cash credit borrower. That is, you are giving it in a branch, in a single branch. For example, branch at location A, you are giving this limit. The borrower can withdraw amount from all other branch also. For example, in location B, there is a branch. From that he utilized, for example, 50,000 rupees. In the original branch, he utilized 25,000 rupees. For classifying as NPA, what you should see is that the total amount outstanding, 75,000 utilized, no. That you should compare with the 1 lakh drawing power. That only you should compare. You should not compare with the 50,000 from one branch, 25,000 from other branch. You should not do it individually. You should do it on an overall basis. On total, how much amount is utilized, and in total, how much limit is sanctioned. That you should compare and do classification for NPA. It should be done by the sanctioning branch. Original branch A should do this work. Classification of NPA. Here I have given an example for drawing power calculation. In banks, we already saw that they will receive stock statement every 3 months and then they will revise the drawing power of the borrower. So here we have an example for the same. For drawing power calculation, every bank will have certain margin. For example, if the stock value is 1 lakh, if the margin is 10%, only 90,000 they will take as the stock value. They will reduce the 10%, it is the margin. If the stock value reduces, they will be safe. Only 90,000 they gave loan, so they will be safe. So if they give a full 1 lakh loan, even if some value decreases for the stock, the bank will be facing losses. So they will reduce the margin, only then they will take the value of the stock. This how much margin, 10% or 15%, that will differ from bank to bank. It will be as per the individual bank's policy. Here in this example, I have taken the stock, the bank margin for stock. If the value of stock is 100 rupees, they will reduce 25 rupees and then remaining 75 only they will take it as the value. Like that, for debtors the margin is 40%. Remaining 60% only they will take it as value. For doubtful debtors, the margin is 20%. This is given in the data. And then the borrower has given the stock statement. In that stock statement, regular stock is 18 lakh rupees, damaged stock 1,50,000 he has, stock in transit 80,000 rupees, and then sent on approval. Stock on approval is 1 lakh rupees. This much is stock with consignee, 2 lakh with uninsured stock, and then consignment stock 50,000 is there, and then total reported stock is 20 lakh. Total of these. So this is the total stock. Here the formula for computing the drawing power is that net stock plus net debtors. Net stock is that adjusted stock you have to take, and then out of that you have to reduce the trade creditor, and then that amount you have to multiply the margin. That margin you have to reduce, and then total debtors, and then ineligible debtors you have to reduce, and then the margin you have to reduce. After that you can make the total and calculate the drawing power. First thing is, this is the realization factor given for each type of stock. If it is a regular stock, 100% you can realize, then the value is 100%. Damaged stock, you cannot recover any amount from it, so the value taken is 0. And then if the stock is in transit, it is verified, so there will be 100% they will take. It will be 80,000. This adjustment factor and all, it will be given by the bank policy. The bank will say whether how much we will take for the damaged stock, how much we will take for the full stock, that the bank will say. The next thing is stock sent on approval. In that there is 50% realization, so 50% amount is taken. Stock with consignee, 70% realization, so 70% amount is taken. For uninsured stock, any bank will not include the uninsured stock in the total stock, so they are reducing the stock. Negative 2 lakhs. And then consignment stock, 50,000, 90% will be realized, so 45,000 is taken as the value. So the total stock is 18 lakh regular stock, and then stock in transit this much, stock on approval this much, stock with consignee this much, consignment stock, uninsured stock you have to reduce. This much is the total adjusted stock value, 18 lakh 24,000. The bank will give only amount for the insured stock. If the stock is uninsured, the bank will not provide loan. Loan will not be given on the uninsured stock. And then the other data given in the financial statements are trade creditor 3,50,000. This in the formula you have to reduce from the stock amount. And then other current liabilities that fund stock. This is what is the meaning of this is the borrower has bought some goods on credit. He has not yet repaid the amount for the stock purchase. So technically the goods are owned by the creditor. Only if the amount is paid fully, the stocks will be coming under the ownership of the borrower. So this is a negative amount, you have to reduce it. This is just like creditors. And then total book debtors. Against the debtors also, after reducing the margin, the bank will give loan. And then in that 8 lakh debtor, 1,50,000 rupees is older than 90 days. More than 90 days it is due, but the amount has not come. Like that, the debtors are older than 90 days. So 1,50,000 is that much. And then debtors on doubtful quality, 50,000. Assume these are included in less than 90 but flagged for extra caution. Now there are certain doubtful debt. For that the margin is more. That is what they are telling. Here in the calculation, total 8 lakh debtor we have. In that more than 90 days 1,50,000. For this the bank will not provide any loan because it is already due for more than 90 days. Okay, for less than 90 days we have 6,50,000 rupees out of the 8 lakh. In that there is doubtful is 50,000 rupees. Good debtors is 6 lakh rupees. In the good debtor the margin is 40%. in the doubtful debtor, the margin is 40% plus 20%. So in the good debtor of 6 lakh, you should reduce the margin of 40%. And then remaining 3.6 lakh will be the value of the debtor. And then doubtful debtor of 50,000, you should reduce 60% margin. And then remaining 20,000 you can give loan. This is as per the bank's policy. So on total, how much is the eligible debtor? 3.6 lakh on the good debtor and then 20,000 on the doubtful debtor. Total 3.80 lakh. This is for the debtor. For the eligible debtor, bank is giving this much loan. And then in the adjusted stock, for the stock value we are taking 18,24,000. And then from that what you will reduce is trade creditors 3,50,000. That you will reduce from the stock amount. And then related stock liability 50,000. Other current liability, that fund stock, that also you will reduce. After this an amount will come. In this you will apply the margin. You will reduce the margin. And then after that you can take that amount for drawing power. As we saw, 18,24,000 less the trade creditor and the other current liability that fund the stock. You have to reduce the margin and then that amount you can take. This debtor 3,80,000 we already found out. So total 40,000 is coming. This much is the drawing power which will be given for the debtor. If the drawing power is 15 lakhs given, they will reduce it to 14,48,000. They will ensure that 14,40,000 drawing power is given. This is a practical example regarding the drawing power calculation. And then now we will be seeing what are the important points summary which you should focus in the bank audit. This is the summary of the important points which you need to check in bank audit. First thing is SMA account. We already saw that SMA 1 account that is 61 to 90 days overdue. That account you have to check. And then provisioning on NPA account. Substandard asset this much provision, doubtful asset this much provision. That and all whether it is properly applied or not. That you should check. And then erosion in the value of security. And due to reduction in the value of security, they will classify it as doubtful asset or loss asset. That also you should verify. And then submission of proper stock statement by the cash credit borrower. If any borrower got cash credit, you should check that whether regularly stock statements are received by the bank, and then the drawing power is revised as per the example we saw. Like that and all we should verify. And then valuation of security. The primary and collateral security, whether they are properly valued, the valuation report is properly stored and documented. And then the valuation of immovable property is done once in 3 years. Compulsorily it should be done. Whether that and all they are doing properly or not, that you should check. And then quick mortality account, that you should check the reasons and report it in the audit report. And then examination of large advances. If the advances are more than the threshold limit, that is 10% of total advances or 10 crore, whichever is less, that you should see. And then that large advances you have to examine fully. These are the important areas which you need to focus in bank audit. These are the, in total, these are total of the practical aspects which you need to look after in your bank audit. Hope this session helped you. Thank you.